Is it raining again? Okay.
Hey, can y'all hear me?
Yes.
Hey, ladies.
Hey.
Hey, everybody. Hey, how's it going?
Yeah, the better.
Going. We're back on another edition of the Let's Talk Coverage Over Cocktail show on Real Talk 100 Radio. Thank you already. Thank you. I'm gonna leave the flyer up in a minute, so you'll know exactly what you're tuned into. And in the meantime, I'm gonna let the ladies introduce themselves. It looks like I lost one of them. Joyce is gone. We have Kim and we have Barbara left. Hopefully, Joyce will join us back again. Go ahead and introduce.
Hey, y'all. What's happening, you guys? Good. Hey, this is Kimberly, all the way from Palestine, Texas. Your insurance lady. You can call me anytime. Whoop, whoop.
Barbara.
Hey there. This is Barbara Calvert out of Missouri City, Texas. I'm just glad to be back to talk to you guys about having coverage over cocktails tonight.
Malcolm, can you hear me?
Yes, ma'am.
Joyce, you back? Okay. We're going to get the show started in a little bit.
Okay, yes. My internet said it was unstable or something. I was disconnected, so I'm back on. Hey.
Awesome. Introduce yourself, Joyce.
Is Barbara on? Hey, Barbara.
I guess I was done. Go, Joyce, go for it.
Barbara, I'm sorry, you weren't through talking?
Yeah, I'm done.
Okay. My bad.
Okay, I'm sorry, y'all. We all over the place, huh? So basically, I'm Joyce Pinchback Schofield, your host. I'm calling you guys tuning in from actually San Antonio, Texas. So I have a lot of going on with my family here in big old San Antonio. So tonight, guys, I have my co-host Kimberly Hutchison and my panelist Barbara Calvert. And we're going to be talking to you guys tonight about the 8 ways to take back control of your money and your life. Yes, sometimes our life and our money gets out of control. So tonight, again, 8 ways to take back control of your money and your life. So the question is, are you taking control of your money or is your money controlling you? So we're here to talk about that tonight here on the show.
That's a good question.
Okay, Kimberly?
That's a good question.
Yeah. Because sometimes I feel like my money controlling me.
My controls.
I'm broke.
My controls me. Because as soon as I get it, it goes from one hand to the next hand.
Yeah,
it's like, I don't want to stay with you, girl. I don't want to be with you.
Right.
It's got somewhere it's got to be.
Right. Yep, that's how it is sometimes. So, like I say, sometimes we got to find that balance, you know what I'm saying? Or make sure we control the money and not let the money control us. So That's why we're here trying to teach people,
Malcolm,
what
you
they
still
need
there?
to do in order to
Yes, ma'am.
Malcolm.
To
yes,
maintain
ma'am. Yes,
to
ma'am.
maintain their money, because sometimes we forget that our money is, we can get the money, but it's easy to lose the money.
Right. That's absolutely true.
So, Joyce, can you hear me?
So, Barbara, yes, I can hear you, Malcolm.
So the question of the night is,
Barbara, you want to go ahead and start?
So the question of the night is, are you controlling your money or does your money control you, correct?
That's correct. That is
correct.
That
is correct, yes. Mm-hmm. That is totally correct. We want to make sure that we're not allowing our money to control us, which a lot of times, that happens in families, that they make the money, but then they lose control of the money by not knowing how to take care of the money. So the money controls us rather than us controlling our money and where we put our money, to ensure that it can grow, and work for us.
Right.
That's right.
So what we're going to do is just go through those 8 ways to take back control. I'll just go through them and then we can just, expound on each one of them. Now, the first thing is how we're going to keep our money, and that's really through a zero tax bracket. And then the next one is to grow the money without losing it, and that's through a zero loss index strategy. The next one is going to be to guarantee our money, and that's through a lifetime income. And we'll expound on all those. And number four is to protect your money with living benefits and life insurance. The number five is make more money. Of course, you can make money through part-time or flexible full-time in the financial industry. And number six, we'll start and build your own business by leveraging technology and a proven successful system, which is what we're in right now. And the seventh way is to expand into a business enterprise that's with unlimited multiple locations. You can do this just about anywhere. And the eighth way is through equity ownership. You can earn sweat equity in a fast growing financial company. And that's this particular company that we're in now, OIC. Okay, Joyce.
Right.
So the first one is
it's called
to
the
keep your
perfect
money.
storm, which is sometimes can be very challenging, because we have with every adversity is a greater opportunity. So we have what we say rise in taxes, which the US
Mm-hmm.
debt is at an all-time high of a 29 trillion, which increases the government spending. So we don't think to look at things like that. Also, market volatility, which is the
Mm-hmm.
market sometimes is unstable. Along with our economy, we got looming market, corrections. We got a 60 million Americans that have IRAs and 401ks that depend on the market. We don't understand how, we're losing our money there. Not only that, Americans are living longer, life. They have so therefore you have that ability to run out of money at a retirement, mostly delaying your retirement up to the age of 70 plus. Not only that, you have the rising cost of healthcare, which a lot of individuals now are having chronic illnesses and critical injuries, which also entails you're going to have high, out of pocket costs with the, loss of income. And then
Mm-hmm.
you have death rates that are increasing. We have the global pandemic like COVID, which COVID is on the
Right.
rise. It's coming back. Well, actually, it's come back. Because I
Mm-hmm.
ended up with it a second time last year. So we have to look at things like that and the change in American diets and in the lifestyles of individuals. Without
Mm-hmm.
adequate life insurance, families and their dreams are left behind.
Right.
So that's always a part of it. So you got the job market changes. So people are searching for other ways to make money. Business ownership, independence in time, lifestyle and income, also business, expansion. The technology has opened up a lot of doors to diversification, expansion to multiple states and location. So you got millionaires and billionaire, the millionaire and billionaire generations, where more people are searching for building their own network through ownership for having large businesses. So
Mm-hmm.
those are just some of the ways that we talk about.
Right. Absolutely.
Well, I know one thing. One thing that I see everybody getting into is creating their own money, finding different ways with technology to create their own money. We're in a whole nother generation. It's a whole new way, even though it's for a lot of people that are entrepreneurs, they have more than one stream of income, and they may even call it their
Right.
hustle, their side hustle, but it's legal. They're always doing it in a legal way. I love that. The new millenniums, that's what they're doing. And since they done came out with new
Right.
medication, that medication is helping Americans
Mm-hmm.
live longer. So I feel like the government feels like, okay, then we can stretch the the retirement age. Because of that, Americans are living longer. So since they're living longer, let's push back retirement.
Right.
Let's push it back.
Mm-hmm.
Now, me personally,
Right.
they can push it back all they want to. When I'm gonna sit down, I'm gonna sit down. But I want to be
Right.
able to sit down comfortably, and I'm
Right.
pretty
Right.
sure a lot of people are like me in that way of thinking. When I sit down, I want to sit down comfortably. I'm old school. I'm going by the old rules.
Yeah.
That's what I
Yeah.
want to do. I want to go by the old
Yeah.
rules.
And that's,
I don't want to have to work till I'm
yeah. Well, I want to go by
75 or
the old
anything like
rules.
Right. Mm-hmm.
But
I don't want
but
to.
now in
I was
society,
talking to
Kim,
somebody
we
not too
almost
long
have,
ago.
we're not getting,
Yeah.
yeah, a lot of the jobs are either they say you either qualified or underqualified for, so they don't want to hire
Yep.
you when you get to be a certain age. So we have to find an extra source of income,
True.
by obtaining our own businesses.
That is true.
That's absolutely true.
I
And
totally agree.
I do. I do. I have my other, as you said earlier, side hustle.
Mm-hmm.
To help maintain my lifestyle. But with what we're doing now, educating the communities,
On what to do with that money.
about how important it is to make sure they find where they're able to control their money again.
That's right. That's right. Because a lot of time people can make the money, but they're not being smart about where to put it.
Mm-hmm.
We invest in the wrong
I'm
things
sorry. I was
because we
right.
have family members, we have children, and everybody's trying to keep up with the latest trends. And those aren't the most important things. The most important thing is to make sure that you save for a better tomorrow. Well, how do you save for a better tomorrow? You put your money in the right places so
Mm-hmm.
that you do have
Right.
a
Right.
brighter tomorrow. We can't invest in just eating out all the time. You can eat out so much until it becomes a bigger bill than your mortgage
Oh,
if
that's
you're
really
not
true.
careful,
Mm-hmm.
or a bigger
That-
bill than your
that's
car note
true.
if you're
That's
not
very
careful.
true.
It's easy to
Yes.
spend and not realize that you are really spending and investing your money blankly. We're gonna have to go back to some old way of
Right.
thinking.
Right.
You know what I'm saying?
Mm-hmm.
We're going to have to get back in the kitchen and warm up something every now and then. Ain't that right,
That's true.
Malcolm?
That's true,
Malcolm, wouldn't you
Kim.
like it that
That's
way? Wouldn't that be better for you that way?
Thought you left me.
That's true.
Well, you're right, Kim. You're absolutely right.
Yeah.
And,
And
and when
then a
I
lot of times, like I
Right.
said, a
Right.
lot of times
So
people are
we
trying to
have to
keep up
figure
with
out
trends and
how
they
we gonna keep.
invest so much into clothes, and clothes aren't going to last either. It ain't going to get you to the
No,
next level, so
because they
that when
gonna
you
that's
get
get
too
ready
that's
to
little
true.
or wear
retire, that you're
out.
comfortable.
Yeah, and there's always something new coming in, so
Right.
you're always going to be in your pocket when you're trying to keep up with that.
Absolutely. And then
Hmm.
that's why I
Yes.
say we're
Yes.
we're investing in blank investments. We're making somebody else rich. We fatting somebody else's
Exactly.
pockets. You know what I'm saying?
Hmm.
How
Hmm.
they one of the sayings that
That's
they say,
very
the rich
true.
gets
That's
richer and the
very
poor get
true.
poor. It's only because we're not educated. We're not thinking outside of the box of where we are and where we stand. And it's time to do that. If we haven't before, it's time to do it right now.
Yeah, that's absolutely true,
Right.
Kim.
Right.
And that can take us to, like a lot of people do have money out there. They have it in their 401ks or their
Yeah.
their IRAs and whatnot. And they have to understand that there's three different tax buckets. You can if you can be on a 0% tax bracket at retirement, how much money do you think you could possibly save? Now,
Right.
there's the tax now, which is basically like your funds that are in your money that's in mutual funds, stocks, CDs, your savings accounts, and after that said, after tax money, the money might grow a little bit, but usually it's just kind of sitting there. And the thing is, it will be taxed. And then you
Mhm.
have deferred tax like the 401ks, your IRAs, your
Exactly.
403bs, and that money, it sits there, and many times there are a lot of fees in that. But if you decide to do anything with that money, if you need something, if you need to borrow against it or whatever, that money is going to be taxed, and there's going to be a lot of fees that goes with it when you try to withdraw that money. Okay.
Exactly.
And then you have the
Exactly.
tax-free retirement also, which is like your Roth IRA, and then your different life insurance products. So that after tax money with tax-free growth is what you really, really want to look toward and
Mhm.
put your money into.
Right. Yeah. So we lose a lot of money without even realizing that we're losing that money
Mm-hmm.
just by on things, everyday things. Like Barbara or Kim was saying, eating out all the time. We lose a lot of money on things like that. So,
Absolutely.
like Barbara said, we can also grow our money. And one of the ways, just think about it, if you grow your money without losing it, as an example, saving $10 a day at 8%
Mm-hmm.
for 30 years, you can possibly have $457,000.
Oh, that sounds
And
good.
that's a hundred thousand
Yes.
dollar investment.
Mm-hmm.
Girl, yes. Can you imagine if we had
Think
thought
about
about
what we
things and knew
spend
it
$10 a
had
day on.
knowledge and
Yes.
It's so
education?
easy to do that.
Yeah,
Yes.
yeah. This is in your early, years, 25. Yeah, $10 a day. Just eliminate the
Yes.
Starbucks. Starbucks almost costs
Girl,
what,
yes.
$6, $7, $8 for one,
Most of
and
us
then
have
you
to
get a
have that
bagel to go
Starbucks
with it. That's
daily.
$10 right there.
Yeah.
And just think $100,000 investment for 20 years. You know how much money that would be?
Mm.
That's $466,000.
Wow. Wow. If I could
Four
just give up
hundred and
eating out all
sixty-six
the time.
thousand dollars.
If I could keep
Mm-hmm.
Starbucks and just give up eating out all the time, I think I would do that because Starbucks is so important. Coffee is so important.
It's vital, a vital heartbeat.
I could
You
give up
gotta
some of the
have it.
rest of the
You
things.
gotta
I could
have
give up
it,
going to
and
the
that's
nail
how we
shop.
are.
I could kind of even limit how much I go to the hair shop. But I got to keep my coffee. I want to keep my coffee. That's important to me.
Oh, hey, I'm here in San Antonio right now. Now, guess what? I just got to. My husband just went and got. I'm just waiting to eat. So you see what I'm saying? Here we go. We probably would have been better by going and get some bologna and bread. Bologna and bread. Fried bologna is always good. And made a couple of
Come on
sandwiches.
now.
You
Put
know
a
what
little
I'm saying?
cheese on
But
it.
instead, we go out and spend $60, $70 on Mexican food because I'm
like it's
guilty.
nothing.
But just think,
Mm-hmm.
back in my 20s, if I could have saved $10 a day, and I'm 63 now, would have been double almost.
Yes.
Yes.
Absolutely.
Mm-hmm.
$157,000.
That's right. That's right.
Absolutely.
Knowledge is power. We don't think about the
Plus,
little things that we're spending money on.
and
You
had the
know, we
knowledge
should we
and
That's
was
right.
be set by
educated
now.
on how I can grow my money. But again, we're
Mm-hmm.
not taught these things, and we do that by, they have they have the fixed, accounts, they have the variable accounts, you have index.
Mm-hmm.
Yeah.
You got that, as we were told, that fixed account is just some dead presidents lying there, they ain't
Yeah,
moving.
just sitting in the bank.
Mm-hmm.
Dead
Mm-hmm.
presidents are staying in the fixed
It's
account. And then when you got the variable, it goes up and
and
down,
down.
up
Mm-hmm.
and down. And then, you're losing money when it goes up and it goes back down. But if you put it in an index account, the money can go up, down, up, down. It's going to stay smooth. This
That's right. It's not going to touch your base money.
That's right.
Mm-hmm.
That is so right. I like that idea.
Yes, we just got to get it to get it to catch on with
saying
everybody,
I
right?
educate healthy school. Yeah.
Say it again, Joyce. We
Everybody,
lost you for a sec.
the ones that would be smart to have listened in class. I'm sorry.
We lost you for a second.
What'd you say, Barbara?
I said we lost you for a
Oh, you
second.
lost. I said, can you imagine? You lost me. Can you hear me now?
Yeah.
Yes.
Can you hear me now?
Yes.
Can you hear me? Okay.
No, okay, so like,
I think you just froze up for a second,
okay.
Joyce.
I think can y'all hear me, ladies?
I can hear you.
I don't
Yes,
know.
I can hear you, Malcolm.
She may be too far away. I can't explain what's going on. It kicked her out before. She's in San Antonio, so I'm thinking that has something to do with it.
Hmm.
I'm not
Well,
sure.
she was saying that
Probably
internet
so.
would be a little shaky in the area where she is.
Yeah,
So
that's
it's probably
unstable.
just going in and out. The bandwidth is not very good, not very strong there.
Okay. I'm sorry, ladies. I can't fix it. I'm sorry.
Hmm.
I will just
And it's
drag.
not your fault.
Hmm.
Okay. All right. So we're talking about ending generational curses basically tonight, y'all, while we wait for Joyce to get back online.
Absolutely.
Ending generational curses is what the game is all about. Learning how to
That's
invest your
right.
money, learning how to invest your money into vehicles that will allow your money to grow for you and work for you instead of you working hard for your money every day. Isn't that right, lady?
Yeah, that's absolutely true.
So tell our listening audience some ways that they can grow their money and have their money work for them instead of them working so hard for their money every day.
Mhm. Well, Kim, I'll just go over this one example on how to guarantee your money. Just say how much do you think you need to make sure that you don't outlive your retirement. You can have lifetime income versus lump sum. Just say, for instance, you had 500,000 at retirement. Now, if you withdrew 40,000 a year, you'll outlive your money in like 12.5 years. Now, if you have 5,000 at retirement that has a guaranteed lifetime income of 40,000 a year, you'll never outlive that money. So it all depends on what type of product that you're that you place your money in. You know, because the IULs and annuities, they're different versions of it that you can place your money in there that would allow it to grow, versus if you have it in just an account or in a variable system where that money is always going to be pinched off of. You're always going to get fees or penalized for using that money, especially if you're taking out a certain amount um, every year, to do different things that you need to do, because life does happen, and there are things that you'll need, like purchasing a car or even a
Right.
house or remodeling your home, things like that. So it just depends on where you actually have that money placed. So, right,
And
Kim?
like everybody thinks that they're doing good by having their money in a 401k plan. And I'm not knocking
Hmm.
having a 401k plan. But at the same time, why should I be penalized for taking out my money? Why
Right.
should I have to answer a whole bunch of questions
Hmm.
and have to pay back my money that I put into this account? And then a lot of times people get ready to file their income tax and they get that statement and they see that their money isn't the same any longer
Hmm.
because they don't understand that with their 401k, it's based off the market. So
Yes.
if the
Hmm.
stock market goes down, they losing. If the stock
Hmm.
market go up, they might win a little bit, you know.
Yeah.
But they're not understanding that because a lot of time these employers, when they encourage you to roll it, to open up a 401k, they don't explain all of those things. You know what I'm saying?
Hmm.
They don't explain all of those things, and then when it gets time to retire, you don't have what you thought you would have.
Absolutely true. And like you were saying,
Yeah.
Kim, it's good that they have it. It's good that they've had an avenue to build that money, to have a 401k,
Absolutely.
but they just have to start looking at
Yes.
it as the years go on, and just, figure out where you're going to actually place that money so that you'll actually keep that hard-earned money, like you were saying.
Exactly.
Hmm.
And how cool would it be to have an avenue where once you put that money in, it's going to either grow or stay the same. And then if you have to
Yes.
take some out, you won't be penalized. You won't be taxed for it. And a lot of times with the 401k, you're taxed twice. They're going to tax you for taking it out then. And then at the end of the year, you're going to be taxed again.
Yes. Hmm.
So it's
That
like,
is absolutely
oh my
true.
goodness. Yeah, it's like double jeopardy.
Hmm.
And that's not a good feeling. And that's just not building. That's not proper building.
Right. Right.
Especially in this day and time where there is other avenues in which you can go and really build some money. That's what I
Hmm.
love about it. There's other
Yeah. Yeah.
avenues that you can go to where you can get money out and you don't have to be taxed for it.
Hmm.
Like insurance policies. We have
Yes.
insurance policies that if you have to take any money out of that policy, that you're not going to be taxed for it. You don't have to answer 1,000 questions about what you're going to do with it, get it approved, and go through all of that rigmarole. You don't have to go through that. You can
Hmm.
actually take that money out, do what you need to do, and you still have money that is still in an account that's growing.
Yes.
So I love
Absolutely.
that, and I love that. And then we have the IULs, which is
Hmm.
an awesome avenue to grow
Yes.
your money as well.
Hmm. Yeah.
So now that we have these things, we want to educate people on their options. Because a lot of times we do the same old because what? We don't realize that we have other options.
Yes.
So when you know what your options are, you can figure out what best fits you.
Hmm. Yeah.
Best way to grow your money. I wished I had a known back in my 20s
Oh,
what I
yeah.
know right now in my 50s.
Hmm.
I
Yeah.
wished I know.
And Kim, I'm
I
I'm
would have
in
been
my
doing so
I'm
much different.
you're so right, because like I'm in my 60s, and just think about it, like you said, if in our 20s, if we had this education, and we were able to put like 150, 200, 300, the way we were
Right.
spending money back then, into
Okay.
a system like an IUL, we would be sitting so pretty right now. But
We'll be in the
playing catch up,
millions. We'll
yeah,
be in the millions. We'll be
you
easy
playing catch up
millionaires.
when you get our age. You got to triple that amount that you're putting in. Just
Absolutely.
so that when you do decide to lay it down, like you said, we're good. We're comfortable. We got to hustle our butts
We're
off now trying
comfortable.
to do it at this age.
Exactly.
Yes.
Exactly. Exactly.
Yeah.
We'll be able to comfortably take the vacations that we want to take.
Mm-hmm.
Um, 2, 3 times a year if that's what we choose to do, and still be able to maintain the household and not have to work overtime somewhere just to be able to afford to do certain things. We would have to
Right.
do all
Right.
that.
I
Life
know.
would be a whole lot easier. And then as we have children and grandchildren and so forth and so on, generational children, we'll be able to teach them the same way of doing things and
That's
even have
absolutely
a way
true.
to prepare so that they will have a better future as well,
Mm-hmm.
in
Yes.
more ways that we
Absolutely.
can help them and do for them.
Yeah. And what better time is it
Yeah,
than now that we know, we
that's what
can
we want to do
definitely teach
anyway.
them. Yeah,
Lady,
teach them. They're young. We can filter that money to them. Teach them what it means. Even sit your babies down and help them to understand that. The little people. You know, and go ahead and put that money toward them in an IUL and just watch it grow. And they will be so comfortable by the time they reach their 20s, 30s, 40s. It's our age.
ladies,
Yes.
ladies,
Right.
I I put the definition of IULs just in case somebody's listening and wondering what are they talking about. There it is on the screen, everybody. Indexed universal life.
Universal life. That's it.
Yeah.
A type of universal life insurance product that offers a death benefit coupled with a cash value account that can be used to pay policy premiums and take withdrawals or loans. So I would
Mhm.
like y'all to expound upon that for a little bit and explain to people that it's just a lot of people. a lot of people think life insurance, okay, that's going to benefit people when I'm not here. They don't realize that it
Right.
can benefit them while they're still alive. Just touch on that for
Okay, I'll um, um, I'll touch on that, and that's a way to protect your money. Let's just say, for instance, the cost of long term care. Right now, it averages about 89,000 a year in a semi private nursing home. Now, the number one cause of bankruptcy in the U.S. is medical bills, critical
Yes.
illness, heart attack, stroke, cancer. And the proper insurance protection is based on what we call the dime, is your debt, your income, 10 times plus your mortgage, plus all the other little added things that goes with a mortgage, cost of your kids' college education. Now, 30 million Americans are underinsured, and that's 37 million have no life insurance at all. So to qualify for living benefits and permanent life insurance without depending on an employer, and the way to do that is through like a product like an IUL, an Index
Mhm.
Universal Life Policy, that'll protect you for all these unseen things that come along. Joyce, I see you're back.
I'm back, you guys. I apologize. I had to go to
Okay.
my phone because for some reason the internet's not. It just wouldn't pick back up.
Hmm.
But yes, Barbie, that is correct. So um, it's a revolutionary,
Hmm.
all-in-one product.
Yes.
All-in-one product, all-in-one product. So my phone, hopefully my internet will stay connected, guys, throughout the show. So I had some people
Oh,
on my
okay.
live, but they're no longer there. I had to cut them off to get on my phone. So I
you sound
apologize for that.
you
So
sound
Okay, that's fine.
you
That's
sound
I,
That's
fine.
yeah,
okay. We understand.
you
I
sound so
tell you.
you sound so much better, Joyce.
I know. I couldn't, for some reason, the internet, I've been on this thing all day, no issues, no issues. And it may be because everybody's probably around the area that it's nighttime. So everybody's at home now. More people are probably on it. Kids are probably on it and all that. So it's creating a little bit of issue for me, but that's okay. I always say the devil is a lie.
Yep,
It's more than one way to skin a cat.
that's
It's
right.
more than one way. So I'm back. I'm back. So
That's
I'm
that's
sorry.
right.
All right.
Joyce,
We were just expounding on that the IUL, Joyce.
Okay, okay.
Joyce, I was telling the ladies to expound upon IUL because a lot of people, when you approach them, whether you're knocking on their front door or you're at a vendor event, wherever, a lot of them are like, and you know this from experience probably, that they're saying, I don't need life insurance. That helps people when I'm not here. But
Right.
what can you do for me while I'm still alive? And I think a lot more policies would be sold if you address that. Hey, you can be your own bank. You know what I mean? You can.
Right. And Malcolm, that's why we want to tell people we talk more because people don't really want to talk about insurance, life, death, and all that.
Hmm.
So we go to the point of saying let us show you how to keep your money. Because keeping your money in the event of an untimely death is all going to intertwine at some point in time. You know what
Hmm.
I'm saying? Because you still entail getting that policy
Yes,
because again it's one of those uncomfortable conversations that people don't want to talk about, so we have to find a way where they'll understand and they're willing to listen. So how do we do that? By saying, hey, let us show you how to take control of your money. Let us
Hmm.
show you how to save your money. Rather than saying, oh, let us get a policy in the event that somebody dies. People don't want to hear that, but
Right.
they're quicker to talk about ways to save money or how to
Hmm.
make money. And that's what we're here trying to do.
Yes.
We're trying to show them. Let us show you how to make some money. Let us show you how
Hmm.
to keep that money. Again, nobody told us about that. Nobody taught us about ways to keep our money. And as Kim said earlier in the program, all we do is spend, 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 and we don't put a dime aside. How many people there's probably millions and millions of people that don't even have $1,000 in the bank right now
Hmm.
in
True.
the event of an emergency.
Hmm.
That's right. That's
You know, every business that I've been in, that's all I ever hear. People don't have money for emergency purposes. I
Hmm.
know because I've been there.
Yeah, absolutely.
You know, I've been down that road being a single parent, not having that money to, you know, in the event of an emergency. But, you know, when you're young and as they say, dumb, you don't think about how important it is. But as I've gotten older, I think about, let me find my ways I can save. But at the same time, that too, I slip, and
Hmm.
I have slipped,
Oh
you
yeah, we
know,
all
because
have.
I'm out here spending. I'm out here knowing that I don't need them red bottom shoes, and I buy them, and I'm thinking, dang, I should have saved that money for this. Can't take them back because you worn them. You know what I'm saying? You know, or go buy that new outfit just to go to a concert or something like that. Go get my hair done, hair weave, and that stuff is not cheap.
Yeah, that's so true.
So
So
true.
true.
Barbara and I was just saying how if we knew back then in our 20s what we know right now at this age, we would be sitting pretty.
Yeah.
What are your thoughts about that, Joy?
If we had been younger, we'd probably been millionaires.
If we
Yeah.
remember if we knew what we know now about
Oh
IULs and
my,
stuff like that,
yes,
you know, the
girl,
money that
we
we
be.
made when we were younger, we could be in the millions right now.
You know, I
Yes.
say we be some bad women. You know, we be walking around here like, look at us now, like this. You know what I'm
Yes.
saying?
Yes.
We be bad if we knew and we even understood just how we could have been rich by now
Yeah, that
by
that
investing
generational
our
wealth was
money.
started way back then, Joyce. We've got kids now. That our
Yes,
kids would be everybody would be set now. If
but
we knew what
but
we know now, right?
But yeah, and Barbara, we both have children, and Kim, you as well. We got
Yeah.
kids in our 20s and 30s. So it's
Yes.
still not too late to
Hmm.
teach them and to show them the ways to save their money. The
Right.
ways that by the time they get 40, 50, they'll be millionaires.
Yeah.
They have
Absolutely.
money in the bank, 400, a
Hmm.
half $1 million in the
Bar-
bank.
Barbara,
Eh,
Denise, and Kimberly. I have a question that I want.
Me, Joyce.
Barbara, Kimberly, and Joyce. I'm sorry if I said that wrong.
Yes,
I'm sorry.
that's
Um,
okay.
so I want you to address the audience with this next question. The next question is this: we're all have gotten older. Unfortunately, we weren't educated at a young age so that we could be rich now. So I would like you to address the listening audience and let them know that there's still a way you can, if you're 50, if you're 40, 50, or 60, there's still a way that
Hmm.
you still have time to enjoy
Absolutely.
your money before you pass away. Explain that to
Absolutely.
them. It's not too late. It's not too late
Yeah.
to purchase life insurance and to benefit from the living benefits instead of the death benefits. No matter what their age is. Did y'all understand me? I'm sorry.
You're talking about the whole life policy, Malcolm, right? How the whole life has the permanent, has the living benefits, death benefits, and cash value. Is that what
Hmm.
you're talking about?
Yeah.
Yeah.
No,
So
no,
yes,
no matter
and
what age, no matter what age you are, because a lot of times, like we said a minute ago, if we would have been younger, if we would have learned this younger, is what we've been concentrating on for the last 10 minutes. If we were younger, we could be rich.
yeah,
I want to address those of us who are up in age and older, that I want to express to them that you still have a chance to enjoy your money instead of working all the time.
yeah, they can put their money in the IULs and
Hmm.
let that money, save that money for what, 3 to 5 years. Am I correct, Barbara,
Yes.
Kim?
Hmm.
And let it sit there, but you have to let that money sit and not, as we say, nibble off of it. Every
Hmm.
month you're getting $500. Every month you're getting another five. The next month you're getting another 500, to the point where you have nothing. You have to let that money be able to grow, you know, and in order to see, the money again, see where
Hmm.
your money is. You can't just keep putting the money there and keep going back, getting money from the policy, getting money from the policy. Because when you do that, come to the end, you'll find out you got nothing.
Yeah, that's true, Joyce. And just say, because one example here is like, just say at age 65, we're getting to that age range. Just say if 130,000 total contributions, if you were able to contribute that amount of money, putting so much in per month, that money would actually grow up to $300,000 in cash value. Mind you,
Yes,
you do have to let it sit, and by being up in age, you are going to have to put a little bit more in, than the average 30-year-old, for
right,
an insurance retirement plan, and that's basically what it is. That's what you're doing at this point.
right,
You're at retirement practically, but in order to have some money, to pull out, we use that index strategy so that you'll have a zero risk of loss, when
right.
you're trying to take
Absolutely.
that money out.
Absolutely. Because again, it boils down to our age because we are older.
Yes.
And we didn't have that knowledge to know how to save that money. That's the thing that's hurting
Mhm.
because if I think that if I were to come back reincarnated,
Yeah.
that's one of the things that seriously, and look
Yeah,
at them and like, look, I'd be so tight I
Oh
squeak.
my goodness. Yes.
You know,
Yes.
I would be so tight I was absolutely squeak. You can get money out of me. It'll be hard. Be like, loosen up, give me some. Oh no, What
Yeah,
you
think
gonna
about
do?
all
You
the money we've gone through, because I've gone through a lot of money in my lifetime.
yes, yes.
Hey, life lessons learned. You know.
Lessons learned.
Hmm.
like I've told
Yeah,
y'all, before, I'm gonna tell to the listening audience. There's been months where we work so much, so we eat out a lot. But here in the last year, I'm disciplined enough to say, you know what? No, that $1,000 plus a month can be spent a lot smarter.
Absolutely.
yeah.
It's easy to go over $1,000 when you're every time you sit down, you're having a glass of wine or two and a full course meal and dessert. That's easily $100 at Papa
Hmm.
Do's or
I
Easy.
Yeah, Malcolm, I think back in my younger days when I would go to the clubs and happy hour. I was single, no kids, okay, guys. But just think back, I think back all those years when I was going to the happy hour in clubs and ordering a drink. Those drinks were
Hmm.
6, 7, $8. You give a $2 or $3 tip. Just think about it. By the time you have 3 or 4 drinks throughout the night, that's $40 right there.
Hmm.
And guess what? I had no insurance, no more than what I had on my job.
Right.
You know what I'm saying? Not understanding and having the knowledge to understand that once that job was done with me, or I was done with that job, I was right back at square zero. I had no job and no insurance and no money.
Hmm. Right.
So my point is, for people who are out there listening, you can never ever have too much insurance because people don't understand or they don't think about it. Once your job ends, that insurance ends.
Hmm.
So while you're working, take some of that money and invest it. Invest it in IUL, something that's going to be able to grow your money,
Right. Right.
for you.
Yeah, and for those that do have life insurance coverage for their job, is usually a term, and like you said, it would end, and then if you try to, you know, transfer that one over to a whole life policy, it's going to be a whole, I mean,
Whole lot.
a whole lot more, a whole lot.
Yes,
That's just like
absolutely. Absolutely.
health insurance is
Yes.
ridiculous. So it's
Right,
always good
right.
to get with a representative that you can really consult with, and just get covered, you
Get
know,
covered.
covered.
Yeah, do those policy reviews. If you have a policy, get with your representative and say, "Hey, let's go over my policy. I want to see what I have now
Hmm.
versus what I can get." Because who knows, you can probably your income changes sometimes. It's possible you can get a better policy. So
Hmm.
sit down with your representative and figure out if you can get something better, or you may not even have what you think you have. And guys, we do free consultations, free policy reviews. Just give one of us a call and set up an appointment. We can do that by Zoom, over the phone, or even in person. You know what I'm saying? And let us look at those policies and see what you have.
Yeah, that's true, Joyce. We can definitely come out to see them. No matter where they are, we do travel, but Zoom is very convenient for anyone.
Yes.
If someone doesn't want
Again,
to,
that's that technology, that
yes.
modern day technology. Because back in the day, we didn't have back in the well, my grandparents and my mom didn't have that because all they had was the agent coming to the door to door knocking. Door knocking.
Yeah.
Uh, to talk to someone about a policy. They didn't have that way that the way. So now we don't have to go out. We can do it over the phone or or via Zoom.
Mm-hmm.
Easy,
And
easy.
Joyce, it could be a like a trust factor with it with a lot of people also, especially like older people when you're dealing with their money. It's good to get to their kitchen table and just sit and talk to them, or like
Yes, yes.
sit on the sofa with them and
Yeah.
go over their policies. I apologize, guys. My dog is
No, that's
saying
okay.
yeah, to just sit down with them and just go over it. You got that personal touch with them also, but just the
Hmm.
idea to know that technology is there and we can be there in that way also. It's,
Right, right.
mhm.
Absolutely, absolutely. So that's a good thing about it. So again, there's just so many, examples. And Barbara, you went over the example if someone was 30 years old who qualified to put $10 a day,
Mhm.
$300 a month, right? Did you go over
Well,
that?
I didn't do the 30-year-old. I just did the 65-year-old since Malcolm asked about the older
Okay.
the more
Yeah.
seasoned individuals.
Okay, just think again. Well, I'm going to go over there and let people
Yeah,
know
go to
that that's
30
listening
year old.
that if you're just for an example, if you're 30 years old and you qualify, to put $10 a day aside, that's $300 a month into an insurance retirement plan, which is a RRP. Just think about qualification. It has, protection up to $400,000 for critical illnesses, critical injuries, and even the terminal illnesses benefit package.
Mhm.
Also you can receive up to $7,000 a month. If you have a critical illness with the benefit package that you may have, and just
Mhm.
think. $500,000 tax-free death benefits, to your beneficiary or your choice, So again, if you're going into your 25, 30, start thinking about um, how you can save and invest your money.
Mhm. And you
You
talk about
know,
a 30-year-old and for a fact they spend that much on a belt
girl,
or
yes. A pair of shoes, a pair of boots.
three
Yeah.
hundred a month, and
Right,
they can be taken care of, for the
right,
rest of their
right.
lives, you know.
That is true. That is true. So we want more money, more money, more money.
Yes,
And
yes,
and
yes.
and Barbara, not only that, this program, the company that we're with, they show us how we can make money as
Hmm.
well. You know what I'm saying?
Yes.
For there may be people out there who's listening tonight that want to do something part time, just completely part time, working from wherever you want to work, when you want to work, and how you want to work, because only you know how much income, your household needs. I know, like me, I know how much money my household needs. So I know how
Hmm.
much I need to work. I know how many policies that I should be getting in per month. So with this business, guys, you can work part time and work your way up to be flexible, to becoming a full time, person in the business, because the insurance business is $1 billion business.
$1 trillion.
Trillion, yeah. Let's put a T
Yes.
on that. Let's take the B and put
Put
the
a T
T.
on that.
But yeah, and then again, like I said, you can do it in person or work from your home, which is an option. Um, You can make $1,000 to $10,000 on a single transaction.
Hmm.
Yep, you can.
That's
People
so
are like,
true.
what? I'm like, yeah, you can make up to $1,000 to $10,000 on one single transaction. Because what we do is we provide, with a full-time training, which we provide online. Again, we go back to the live
Hmm.
Zoom training, and we also have field trainings as well. And Barbara, the company also assists in your licensing process. You
Sure.
get a complimentary online training course for your life and health license, which for 30 days means
Hmm.
you get this program for 30 days.
Yes.
Because I know I paid for mine.
Yeah.
With my practice company, I pay for mine.
Hmm.
So you got with our infinity company, they give you the steps and the process to help you get licensed. All you
Yes.
gotta do is study and take and pay for your test.
Hmm.
Who does that? Not too many companies do that. You know what I'm saying?
Just, all
Um,
they got to do is take that time out, 30 days, and just dedicate it to passing that exam. It's a free
mhm,
opportunity, you know.
right. And,
Yeah.
and they give you that guideline step by step on what day to study for this, what day to study for that, when you need to, what you need to make by this day, in order to know if you're going to be able to pass that test or not. You know what I'm saying? So the process is easy. It's no excuses, no excuses whatsoever. Um, so you can start making money immediately. Uh, just as a marketer, a licensed referral person. You don't have to do selling a policy, just refer to somebody and you
Mhm.
still get paid. Who does that?
I know. True.
No
True.
company does that,
A very good opportunity.
hmm
Hmm.
So you can partner, with a financial professional, what we call earn while you learn model.
Hmm.
It's an earn while you learn model. So we represent, $1 billion A-rated financial companies like NLG, uh, what is
AIG.
that? AIG,
Hmm.
F&G, Mutual of
Digital.
Omaha, nationwide, just to name a
Nationwide.
few. Yeah, just to name a few. So, recognition and lifestyle events, conventions, and worldwide trips. So, we
I'm
do
really
all
excited
of
about
this.
those trips that are coming up,
Oh
Joyce.
my God, Vietnam, I'm looking so forward to that. That
Yes,
alone, just
that
like,
will be
yeah,
amazing. Because
yeah, just
got the Bahamas next year, right?
yeah, yeah. My husband and I was talking about today. I'm like, babe, how would you like to go to Vietnam? He goes, what are you talking about? I'm like, babe, Vietnam, that's a dream. That's a dream come true.
Yeah, that's a really
Oh
different
my,
experience. I would love that.
yes. Yeah, I want to be able to change my address.
Right.
Trade that address, baby, from to Schofield
That's
Street.
right. That's
You know what
right.
I'm saying? Rather than over there where I live now, I want my name on the street sign. And that's a vision.
Yeah,
And
absolutely
change
true.
my 10-digit number to a 2-digit number, 22
Yeah, that's
Schofield
those
Lane.
gated communities that only have like two or three houses
To
in
the house. Yeah,
the
yeah. There you
whole
go.
block. You know.
You got the whole block. Yes, yes. And it can be done.
Yeah.
It has to be done. Only you can do it to know again how much money you want to make.
Hmm.
I want it all.
Yeah,
I don't want to leave nothing on the table.
that's right. There's no reason why we can't have it.
The sky there's no limit to the sky. There is no limit to the sky. Nope, no limit to the sky. So again, that's another way of controlling your money. Because you know how much money you can make. And you can make that money and save that money.
Hmm. That is absolutely true.
You
True,
know,
true.
was it the guy that we were listening to this morning? He was saying that profit, talking about the profit.
Wages, profit versus wages.
Yes, girl. He say wages make you a living and profits make you
Rich.
rich.
Yep.
Makes you rich. And you really don't think about those things as you hear someone say it. And I really took that so hard to know. You're right. Wages made me a living, but
Mm-hmm.
profits. Just think about the profits from my
Yeah,
work.
it can absolutely make you rich. That's that entrepreneurial spirit, you know.
Yes, that
You got it. No
it's
matter what, you got to get up and go get it because
right. It's
that's
changing.
yours. It's yours for the taking.
Right. It's changing your mindset,
Hmm.
changing your way of thinking about life itself. You know what I'm saying? Building and expanding. Because I thought, man, that's something he just said. Profits make you rich and wages make you a living. But
You'll
who
live
I never thought about it like that.
it. Hmm. Yeah, that's so true. That's so
'Cause,
true.
even with that being said, you can work part-time on your fortune and make more than you could when you were making wages.
Hmm.
Just think about
On
it.
your full time job, your
On
full
your
time.
full-time job. Yes, yes. So your part-time give you a lifestyle, you
Hmm.
know.
Let's touch on that for a second, ladies. Let's touch on that where I'm not sure y'all are more versed than I am with life insurance. So tell our listening audience how they can take their life insurance policies, take funds from it, and make investments, just like banks do.
Yeah, they can borrow from those insurance policies after a certain period of time. Um, Not only that, individuals don't know that a lot of individuals don't know because I didn't know, I was never aware of it. You can also take your insurance policy to a bank, and the
Hmm.
bank will hold your policy while you get a loan.
That's that collateral, that equity
That's it.
collateral.
Yes, I never knew that. I never knew that. And I'm sure just like I didn't know it, there's probably billions of people out there that don't know that. Just to build credit just alone. They go get a loan with your just think about it, go get a loan using your policy and make those timely payments to build your credit.
Hmm. Yeah.
Just something to think about, you know. And yeah, you can borrow your money from your policy,
Mhm.
for whatever you may need it for. You buy
Yeah.
a new car, put a down payment on a home. But one thing you need to realize that money has to be paid back on that policy in order
Mhm.
to get the full value of it if something happens.
Yeah, and just remember, it's a process. Just like you were saying, Joyce, building your credit. Building cash value is a process. You can't just say you're going to pay on an IUL or a whole life policy for a couple of months, and then you want to borrow against it. You got to let that money build. You got to let it grow.
Right.
And
Hmm.
that's
Hmm.
anywhere from usually 3 to 5 years. 5 years is pretty much typical in order to gain a reasonable amount for you to actually borrow against. So you just have to be in a position to really allow that money to grow.
Right. Right.
Keep in mind that that is a definite savings for you, and plus you actually building on that versus having it in a safe little stable account that's not going anywhere, but they're charging you fees
Hmm.
every
Right. Right.
month.
So I just want to, I'm like, I don't be wanting to work for no bill. I know that.
Right.
I
Hmm.
want to, I want to be working on my future. You know what I'm
Yeah.
saying? I don't want to work on a bill to have to pay for bills. I want to work on how my future is going to be, by me, learning how to, protect my money.
Hmm.
So
Yeah.
there's just so many,
Absolutely.
so many avenues that you can go to or go through in order to make sure your money is protected,
Hmm. Yeah.
and everything.
And I can't emphasize enough to the younger people, you know, especially if you're making money, even those influencers out there, you're making good money, with those influencer jobs and
Yes.
Instagram and things like that. Don't by you being able to purchase all those glamorous things that you love, that's fine, but really
Hmm.
think about your future. Some of them have kids and some of them probably don't, you know but if you don't, you're putting it somewhere that money's going to be taxed like crazy, because believe me, the the IRS, the Uncle Sam is looking at you. You know, they're gauging
Yeah, he is.
whether you know it or not. So
Yeah.
you might want to get smart and really think about talking to somebody, talking to a financial representative about putting that money in a safe place for you, so that if God forbid something happens, you're not as beautiful or glamorous, or you're not getting as many likes, or you know, whatever it is that takes you, make you get to that point. You know, you've got that money set aside for that rainy day, for that
Yes.
time that might come along when you're not so popular anymore.
Right. Right.
And that
Right.
that goes for any avenue that you're working with right now, that's making you a good amount of money. Really think seriously. You know, today's economy is rough. You know,
It is.
think about the years ahead. You know, when you may not be able to earn as much as you are right now. You know, think
Right.
about
Right.
putting that money in a safe avenue, a safe product, like an IUL, like an annuity, where you
Right.
be your own bank, without the
Absolutely.
chance of it disappearing.
Because it can't get away from you quick.
Oh yeah,
You
oh
don't
yeah,
even realize it. And it's happened to so many of those athletes out there. They've
yes,
lost their money with a blink of an eye, get
yeah,
millions and millions of dollars, and all of a sudden, by next year, they're broke
yeah.
because they
Most
did no investments.
Right. Most of them got entourages that follow them around just because they of what they have, you know. So what's the guy Tyrese? He was on what's the talk show? Dang, I forgot it, but the one with Cheryl Underwood, and he was
Okay.
saying that, you know, people like you and follow you, and are, you know, sometimes befriend you for for what you can do for them,
Give them.
you
Hmm.
know, what you can
Absolutely.
give them. And those young people that's going around, or those athletes or whomever that have all these big entourages, and you spending money on them, your boys, and you know, you're buying all your fancy cars, you know, if that's your thing, then fine, but still put a certain amount of money, that money aside, so that, you know, once your popularity is gone, you know, you got a good nest egg to fall back on.
Hmm. Hmm. But and not only that, once they're broke, those friends that they so-called friends that they had,
Oh,
they're
they
gone.
they're going.
They're gone. They're no
Mhm.
more. They're no more. They disappear. And then they're broke. And then who when they need something, I bet not one of them
Right. Who's going to
you
help
know
them?
help them.
Mhm.
Yeah.
Yeah.
And that's why again, and a lot of them have learned, some of them have made comebacks, but
Mhm.
very few.
Right.
Very few.
Mhm. Yep.
Very few. Yeah, some of them have made comebacks, but very few
Right.
and everything. Hmm.
Mhm. Yeah. But I'm just thankful that we're in a position, Joyce, that we can build a business where we can, you know, share this opportunity with people. It's actually a
Yes.
very low cost. Like you said
Mm.
before, you can do part-time, full-time. You know, it's a
Yeah.
track, you know, to an agency, or like a business director position. You know, so um, you know, we leverage meetings and trainings, and you know, all these opportunity presentations, and you know, the trainings are phenomenal. You know, as we
Oh
saw
my
today,
God. Yes.
they
Yes.
really are.
Totally off the chain, off the chain
Hmm.
trainings that are just so inspirational and
Yes.
so
Hmm.
invigorating that it makes you want to just go spread the word. And that's our mission, is to
Hmm.
spread the word, is to make, talking about insurance contagious, talking about teaching people how to protect their money and save money, because it doesn't matter saving your money, protecting your family, it's all intertwining together.
It
It's
does.
all it's all intertwined together. So you can do both. You can do, and there's so many different ways to do it. It's just we're trying to all accomplish the same thing, but talking
Hmm.
about it in different ways.
Right.
if that makes sense.
Mm-hmm.
We're all trying to accomplish the same goal.
Mm-hmm.
And that's protecting your families, protecting your money, making sure the families are okay when you're no longer here, making sure that there's money set aside, to bury the loved ones. So,
Yes. Mm-hmm.
and then for the beneficiary or whomever you choose is to continue living when you're no longer here. And again, I think Barbara, you said it earlier. People don't understand insurance is for the living and not the dead.
Yeah, absolutely.
You
Mm-hmm.
know,
Absolutely.
because you still have to keep moving. You still have to
Mm-hmm.
live. You still have to take care of the house. You still have to take care of the car. You still have
Yeah.
to take care of the kids. The kids still need to be clothed. The kids still need to just
Their
you know
education.
education. Yeah, yeah.
Yeah, yeah, and just think in terms of being a living benefit. Just say God forbid, you get this critical illness, you have this major accident or something, and God allows you to stay on this earth. You have that opportunity to get a large portion of that benefit,
Hmm, hmm,
while
hmm.
you're still living, while you're still
Right,
living,
right.
you can do that, and if you build on it,
Absolutely.
just having that money and actually build your own bank. If you let it stay there long enough, once again, you have the opportunity to borrow that money.
Yeah.
That's your bank. You can get that money and do whatever it is you need to do with it. Your kids' education,
Hmm,
buy you a
hmm.
car, remodel your home, take a vacation. There's so many things you can actually do while you're living.
Right. And Barbara, we need more people to help us spread the word. We need more
Yes.
people
Hmm.
to come on board to help us help individuals, you know, um, teach them and make them knowledgeable of how to save their money. You
Yes.
know what I'm saying?
Hmm.
How to protect their money, how to grow their money. So we need people to come into the business. This is not a hard business. This is an easy, easy business.
Yes. And just think about it, when we sit down with families or individuals and we talk to them, and we talk to them about a policy or insurance coverage, and they say, well, okay, I can't afford that. Well, if you can't afford that, here's a prime opportunity right in front of you to build on that,
Yeah,
to
absolutely.
work with us part time, so that you can earn an extra $1,000 or
Right.
per, even per month, but you can do that on one sale you know
Yes,
and
absolutely.
money
Absolutely.
like that is life changing for a lot of people, so that those
Absolutely.
opportunities are there, to build. Join us, let's build this thing together.
Yeah, let's make it contagious, as we always say. We want to make coverage contagious, and that's what this show is all about. Us getting the word out there to families,
Mhm.
to help them, learn and be knowledgeable about how to protect each other. You
Absolutely.
know, we always say, hey, if you have a significant other out there, you're no longer together. Guys need to sit down and have an uncomfortable conversation and
Hmm.
talk about, hey, we need to make sure that if something happens to either one of us, that child or those children are still being able to be taken care of.
Hmm.
you know, if I know better with my ex back in the day, I've got three, kids, I maybe we could have sat down and had a civilized conversation as to what we need to do to protect our children. It's not
Right.
about us,
Hmm. Hmm.
and I always stress that. Have those uncomfortable conversations. Are they going to be uncomfortable? Yes, most
Hmm.
definitely they are. Is
Yeah.
it necessary? Yes, it's necessary
Yeah,
because
it's just a fact of life. It's just a true fact of life, that we
right,
deal with, that we have to deal with. you know we're confronted by a lot of things in life that are uncomfortable. you know
right, right,
you know a lot of times we have to speak. I'm not the greatest speaker, but I love doing it. But it's
yeah,
sometimes it gets a little bit uncomfortable. Those are things that we do because there's a need, and there's something that's very important to be said. So in cases like that, we get uncomfortable for a lot of things.
Yes.
So
Yeah.
so what is life? Let's talk about it. Let's get that resolved. Let's find a solution for for our children, for building a future, for building generational wealth. We can find
Right.
solutions.
Right.
You know,
Right.
even though
Right.
it may be uncomfortable.
Yeah, and a lot, and it is. It's uncomfortable for us as well when we get those phone calls from
Hmm.
family members wanting to know is the policy still live? You
Yes.
know, and it gets even more uncomfortable when you have to tell someone's loved one, "I'm sorry, but that policy is no longer in effect."
So true.
So
It
then
happens every day.
that family has to figure out, okay, so what are we going to do now? you know go do a GoFundMe, or
Hmm.
go do sell barbecue plates, or bake sales and things like that.
Hmm.
Those things should be uncomfortable.
Yeah, and just think about the time frame that it's going to take to do that, to accomplish that. You know,
And a
you got
funeral
to
is
let
not
your
cheap.
loved ones sit there while you raise the money.
On
You know,
ice.
uh-huh. Yeah.
And that could go for months or weeks, if
Hmm.
for God knows how long it will take to make sure that the funds are gotten.
Hmm.
you
True.
know, and you got so many family members that are in what do you call it, an uproar with each other, that they
Yeah.
don't want to even help each other. So
Hmm.
there you go. Who's gonna bury my uncle? Who's gonna bury my cousin? My
Hmm.
cousin died. I see and read about it every day,
Oh yeah.
where people are having raising money through GoFundMe's, and not understanding the
Hmm.
how the GoFundMe means actually
How it
work,
really works.
because they don't understand. If you don't meet your target goal, then your money that you may have needed $100,000, you got 99,000, and you like it $1,
Hmm.
right? If you don't get that $1, you don't get that money. Not only that,
That's crazy.
GoFundMe's take a percentage.
Hmm.
So you need to actually go over what you really need in order to get that money. And if that money is not goal isn't met, the money that has been sent by individuals, it goes back to them.
Yes.
So you're
Hmm.
right back at square one. So
Right
the
back at square
easiest thing to do is to get those policies, get those IULs. You got a 401k out there. Put that money into an IUL, to grow that money.
one. Right. Right.
So
Hmm.
it's always better to have insurance, 5 years later than 5 minutes too late.
Yeah. That's so true,
And
Joyce.
I say it all the time. People don't need insurance until they need it. They don't need insurance until they need it. And you may have gone, and I've known
They
family members
don't
that,
think they need it.
yeah, I've known family members, even since I've been in the business, that I've gone to them, to try and say, hey, I'm an agent now. I want to talk to you about a policy. Well, I don't need no insurance. But guess
Yeah.
what? 2 weeks or 2 months later, they're no longer here. And
Yeah.
guess what? Their families stuck struggling, trying to get them buried.
Yeah. It's so true. So true.
You know, and as I said before, I've had family members who did get policies because they didn't want to be known what they've gone through in their past.
Hmm.
So a family member of mine that happened to, and I've said it before in the show, ended up getting, beat up in Houston.
Hmm.
Uh, just a month or so later after I talked to him. So we don't know what tomorrow's gonna bring. Is,
That's
is what I'm
true.
trying to say. We don't ever know what tomorrow's gonna bring. We are here today and gone tomorrow.
Yeah.
Or tragic freak accidents happen all the time.
Hmm.
Freak
In a
accidents
heartbeat.
happen with children, adults as well.
Hmm.
You can walk out the door and fall down and hit your head. You think you're okay, And next week, you were like, that person's no longer here. And they're like, well, what happened? Well, she fell and hit her head. And
Mm,
what happened? It's
right.
the simplest thing. It happened to my grandfather. Went in the hospital for a little blood clot in his leg to be removed or whatever. Never came out of the hospital.
Yeah,
I never understood that.
I know. It
What? And
definitely happens.
it's like, what happened? He was
Mhm.
fine, talking just to go in for a procedure. But guess
Right.
what? A
Hmm.
simple blood clot in the leg
Yeah.
traveled
Mm. Isn't that
quickly.
something? And that the same thing happened with my family too, Joyce. Like, but my brother. He probably would have been in his 70s now, but he passed away when he was 21, about to be 22 years old. Just went in for a routine, thing. I think he was having some kind of little pains in his side or something, and that young man did not come out of the hospital. He did not come out. You know, um,
Wow.
yeah, his wife was pregnant.
Wow.
Yeah, my niece and my baby sister are the same age because my mom was pregnant
Wow.
with her at the time. So it's like things can happen, just beyond your imagination at any time, any given time.
Yes. Yes.
Mhm.
And you think that you would never think, because like you said, I often wonder what happened there. How did that
Mhm.
happen? I'm not medically inclined. I'm not a doctor, but I've always had that question.
Mhm.
What happened? Just a simple blood clot. What
Yeah.
happened to my papa? That was my papa. You know what I'm
Right.
saying? It
Mhm.
just things happen.
Yeah.
And I use those past experiences as my story when I'm talking to people.
Mhm.
Because you don't know. My mom, example, went in for a procedure, never made it out.
Right. Mhm.
Went into cardiac arrest in the hospital. And again, we're thinking everything's okay. We
Yeah.
get her policy, due to the fact that she had been in a car accident on top of that as well.
Mhm.
We thought the policy was good. Guess what? There was no insurance. So my sister and
Mhm.
I had to come out of our pocket with
Yeah.
cash
I remember
money.
when you were going through that, Joyce.
Yes,
Mhm.
absolutely. And it was like, what? And then you got my brother 2, 3 weeks later passed away. No insurance again. And I'm like, God, no, what is this?
Mhm. Mhm.
Nobody had insurance. And you're over there, paying 15, 16, $17,000 for a funeral back to back. That's $30,000.
Mhm. Yeah.
Because
Absolutely.
it entails so much that you don't even think about. It's just so overwhelming to sit down with a funeral director and they're going through this long old sheet of things that you have to have because it's state regulated. And
Mhm.
all those things add up and they add up and it's add up. And by the time you get to the bottom, like, what do you eliminate?
Mm. Oh, I know. Oh my
What do
goodness.
you what do you eliminate?
Hmm.
Most of it has to be done.
Yeah, that's true.
Most of it has to be done.
Mhm.
And
And
it's just,
what do you do to
what do you do?
come up with
And
that?
I thank God that to me, I thank God that I was able to bury my family members. But
Hmm.
just think if I hadn't had that money from working.
Hmm. True, true. It's already heartbreaking. Then this to think about
Yes,
now
that to
that
deal
you
with the
got to
stress.
scale back all this.
Oh
Yeah,
my God, it's just
it's
so,
something.
so much. It's just so overwhelming. And I'm sure there's more people that out there that have gone through worse than I have.
Yeah, yeah. Because
Like you say,
did not have
yeah,
that
it's
option. They didn't have that backup system.
no,
You know.
no. It's so stressful. You got little kids that are no longer with us,
Mhm.
um, because of dumb stuff that's going on with parents and
Yeah,
what do you call it, murder suicide,
yeah. Oh
and
my God,
with
and it is
three,
so
four, five
prevalent right now.
kids, three and four, five,
Like,
6 kids,
yeah, every other
and
week you're hearing something like that.
yeah,
Hmm.
yeah, it's like, what do you do? How is this gonna work now? because it's one of those things. Again, that's why we try and encourage individuals, get those policies, get that money where it can be safe in the event of an emergency. And now it's the time to start.
Yeah,
Now, right now.
absolutely. Right now. Right.
Not tomorrow, not tomorrow, not today, not next week. And just think about how many people have said, "Oh, I'm gonna wait until next week. I'm gonna
Mm,
wait until next month," and next month never came for them.
right. Yeah.
Next month never came for them.
Hmm. Things happen at the blink of an eye. So it's like, you know, you have to stay prepared so you won't have to what is it, get
hmm
prepared.
Stay, what you say? Stay ready.
Yeah, stay ready.
Stay ready.
Yeah.
Stay ready. So,
Yeah.
yeah,
Yep, and that's
yeah,
that's life. So we're just here. I thank God for the platform that we're here. We can spread the word, and we just you know needed to become a household word, a household
right.
conversation. You know.
Right, right. And just for those of you out there listening or who may go back to view the program, we are hiring business partners. We're looking for business partners, to get you trained in the business where you too can make the kind of money that you want. You can make that $1,000 to $10,000 for one transaction.
Mhm.
My number, in case you're interested, is 281-814-7332. And Barbara, you can.
Yes, my number is I'm Barbara Calbert. That number is 346-243-4011, and we're available via Zoom, or we'll come and meet you, and
Yeah,
or get
absolutely.
you on a training opportunity call, and we're happy to talk with you about moving farther in the business, and just how you can earn an additional income, either part-time or full-time,
Exactly. Yeah. And
while
again,
protecting your family.
because because even with me getting into the business, I started as a part-timer
Hmm.
and I worked my way up to full-time. Which it worked for me. It's not saying that you just got to come in and jump into full time. No, if you have a job out there, we always say don't quit your job.
Hmm.
Come in here and work it slowly, learn the business, and you're not going to learn everything all at once. It takes
Hmm.
time over a period of time through with training.
Right. Hmm.
With training, yes. So again, you're not going to learn everything, but that's where we come in. We're here to help you and guide you, and we have great mentors ourselves that help us. So we want to be able to extend that to someone who wants to get into this business, someone who's interested in going out there and sharing this with families and teaching them how to take control of their money, teaching them how to protect their loved ones
Right. Hmm.
and everything.
Yeah, and there's so many people that have come into the business that don't that didn't know anything about the financial services industry, the
Like
insurance
me,
industry. Yeah,
like me, I knew nothing.
like me, I was introduced to it 4 years ago, and I kind of just thought about it, dabbled around, or what have you, and then at the end of our deployment, that's when I had my surgery too. So I'm like, okay, I'm sitting here. I got, I'm antsy. I had to do something with my time, so I decided to go ahead and study. I just gave it that consistent recovery time, that little 30-day interval while I was recovering, and I studied for that test. Many people do it way faster than that because, believe me, we have the materials now where you can learn it faster, and this thing is a continuous learning process. You
hmm
grow and learn something every single day. There's so
Every
much
day.
information, yeah, in this business, that you're not going to learn everything at once. You learn daily. There's always something you're going to learn daily, and then rules and regulations are always changing. So you have to stay abreast of the changing times, things that are happening in the industry politically, things like that. But it can be intimidating, but it's really not.
Mm-mm.
We have the tools for you to study, within a week to take the exam, and then
Yeah,
after
yeah.
that, it's just a lifelong learning process that you'll enjoy and plus make money while you're doing it.
Right. And you have to be able to concentrate and say, okay, this is something I want to do. This is something I'm going to do. As Barbara said, when I came into the business, I knew nothing. I knew nothing about the business, but I did know it was something that I wanted to do after my own personal experiences with my mom and my brother. I'm like, man, nobody else can go through this. I didn't want to hear tell and I know I can't conquer the world at once, but I didn't want someone else having to be in my shoes,
Mm-hmm.
of having family members that had no insurance, that weren't covered.
Mm-hmm. Right.
I knew nothing about the business. I started part time. Built a team of 47 people in a little over a month and a half. I
Mm-hmm.
just started building. I started spreading the word. I started talking about it, talking about it, and talking about it, and talking about it. And that's what we have to do. We have to keep talking about it
Right.
to people to until they get it.
Mm-hmm.
Until they become knowledgeable of what our mission is. And our
Yeah.
mission is to be here to make coverage contagious.
Mm-hmm.
Not for one nationality, not for one gender, but for everybody. Be-
Absolutely.
because when it comes down to death, death doesn't discriminate. But the
Mm-hmm.
only the only thing in life that doesn't discriminate, death. Death does not care who you are, how big you are, how short you are, what your skin color is. Doesn't care about any of that. When your time
Mm-hmm.
comes, your time has come. That's for me
Right.
as well.
Mm-hmm.
So we're making it a mission to go out here and spread the word, making it a mission to talk about it, what we need to do, for the communities.
Right. Right. Yeah. Yeah. And the idea, my thought process, the idea that this is like a billion-dollar industry, you know and the amount of time that it takes to actually study and get a state license exam. You can be licensed in multiple states, where you can assist people in 50 states, to be honest. And it's a minimal amount, to have this type of career, and believe me, I'm a life learner. I love education. I love college, and I have a couple of degrees. But the fact that young people coming out of high school can do this at the age of 18, where they're out there
Mhm.
hustling, with little side jobs at either McDonald's or Walmart or wherever. And I don't knock those, because they have that tenacity to go out there and get what it is they need. But this is an opportunity for young people to come into the business within 30 days and actually be making a really, really good salary, while you're still going to school, if you decide to do that as well. Because it's,
Part
it's
time.
part time. It's a really, really good living. It
Hmm.
really is. And there are many of our mentors that have been in the business since they were 18, and they're like in their 30s, 40s, 60s now, and they're making millions of dollars. So
Millions.
yeah,
21-year-olds.
yeah.
I've seen it.
Hmm.
21-year-olds making $100,000 a week.
Yes.
A week. And
Real
I'm
money.
sitting there like,
True,
here
true
I
love.
am at my age. What was I thinking? But it's a cultural thing, if
Yeah.
we weren't educated on that,
Right, right.
So what we're trying to do now, we want to be able, we're trying to commit to empowering individuals with
Hmm.
our business concepts, in this insurance business. So,
Hmm.
we want to go out and enhance the lives of other individuals, and to make sure we have a drive to make sure they grow and grow their own business as well. Because once you get into this business, you
Hmm.
have your own business. You're an entrepreneur.
Yeah, Yep, that's
You
so
have your
true.
own business, you know.
Have that flexible lifestyle, you know.
Exactly. So we're making an impact in the community here
Yes,
with this
absolutely.
insurance.
Hmm. Absolutely.
Lady,
Yes.
ladies, we have a comment on the screen. They're wondering how the people are making so much money. Someone named Apple.
Apple, she said, doing what?
When y'all were, she chimed in. He or she chimed in when y'all were saying people are making millions of dollars a week, and that's when they.
Hundreds of thousands. Yeah. They're
Hmm.
going out there talking to individuals about policies, or acquiring policies. And a lot of the companies, they have to understand how the insurance companies pay. A lot of the insurance companies may pay, some insurance companies pay a year in advance on one policy, right?
The whole year.
Per year for 1 year. So, and then some of them may pay you 8 months in advance, and then after the 8 months, you start getting the other 3 months as the year progress. So
Yeah, this
that's
is,
how.
this is the
So
insurance business, the financial
and this
service
is the
industry.
yeah, funny, yeah. So the
Hmm.
business is a $1 billion business, and you go out there and just say, for instance, and I'm glad they asked that question, because we when you get to a certain level, we have different levels that you can become being an insurance agent. You know, in the business, because you start out being like a field trainer. Um, um, my mind just went blank here.
Hmm. Yeah.
A field trainer. I mean, and then an associate, and then from there to a director, and then a business director. You start out
Hmm.
making 40% of anything that you sell. Just think, if you do. Let me give you an example here. So just say, for instance, if of someone who has 4 families a month with an IRP or an IUL plan, that helps them save 200. They say, if someone say $220 a month, which results in 10,000 target points. Okay, if you're a training associate, just think, you have 4 families at 40%, four and 40. That's $4,000 a
Hmm.
month. And then if you do in just annual income of $48,000, okay, that's just an example. And then if you're an associate, that's your level that you are. You have 4 families and your commission is 50%. Your monthly income is going to be $5,000.
Hmm.
That
That's
totals to
only
an annual.
one family per week, too, Joyce.
I'm sorry.
And that's one. I'm just letting them know that that's one family per week.
Yeah, that's one. Yeah, one thing. That's $60,000 right there. Then you
Mhm.
got your rest of your week free if that's what you want to do. You can
Right.
always do more. Just say if you are a senior associate and you had a 60% income, right? That's $6,000 a month. That's $72,000 of annual income right there.
Hmm.
$72,000. Who can't use that?
Absolutely.
And if you become a business director, you're at a 70% contract level. Again, helping 4 families a month. As Barbara said, that's one policy per week. One policy per week. That's a $7,000 income that month. Just think, if annually, that's $84,000. Who doesn't want that? So
Hmm.
that's how we make our money. That's how we make so much money. I don't put a limit on my policies. What I'm going to do. I work because I'm constantly talking. I'm talking to family. I don't say, oh, I'm only going to do one policy this week.
Right.
No,
And,
I don't put a limit on
believe
it.
me, once they start making that money, once they see one like that, believe me, they're going to want to keep. Oh, I can do this like this and an hour. You know.
An hour.
So you
An
got the
hour.
opportunity to schedule, accordingly. Schedule, 2 to 3 families per day, or individuals per day. Schedule a certain amount of families per week. This is how you really, really make your income. You know,
hmm And just think about, if you
crazy.
were to build, if you want to build other agents under you, you make money from that as well.
Mm-hmm.
You make that, and then you got that residual income that's constantly coming year after year when those policies renew. That's why it's so good to do follow up with your clients because your business is your business. You just
Mm-hmm.
can't go out there and give someone a policy. You can, but if you care about your clients, you're gonna keep that, do that follow up. You're gonna keep in contact with them. Send them a thank you card. Ask
Mm-hmm.
for referrals and things like
Right.
that. You know that builds your business
Mm-hmm.
because
Because they
word of
have
mouth,
family members, you know.
yeah, word of mouth is gets around quicker than anything else. It's just like somebody getting in a fight. I guarantee you it's gonna be all over uh with TikTok or YouTube.
Oh yeah.
I've seen it. And it's been it's gone viral. So my question is, why can't we make coverage contagious and make that viral as well and show people how important it is to have it?
Mm-hmm. Yeah. Not only to
It's
have
much needed.
insurance, but you can make income, make a very, very good income from it also.
You can, yes. Very good income.
Mm-hmm.
So that's how we make our money. You know, like you said, the
And
sky has no limit.
you can write your own policy. You can get paid from your own policies as well, your own personal.
Yes, absolutely.
Mhm.
You know, just think about, if you have kids, you can tell kids your policies. Under
Mhm.
if they're under 18. If they're under 18, also just think about the fact that if you're a grandparent out there and you have grandchildren, you don't need the parents' permission to make, do coverage on those kids.
Mhm.
All you need is the name of the child and a date of birth.
That's
That's
so true.
it.
You know, you got a lot of people, dropping their kids off with the grandparents, and a lot of the kids love being with their grandparents. They love it, and the grandparents love taking care of them. So why
Yeah,
not? Why not? Get policies on the children as well, the grandchildren as well. You know.
yeah, yeah. So that's how we
Yeah,
make
they're
our
right.
money. Yeah, as we said earlier, the insurance industry is a billion-dollar business, billions of dollars. There's so many people out here that don't have it. Don't have it. You got these was Gen Z. They're making so much money, they don't even know what to do with it.
I know. I know.
They don't even know what to do with it. I wish I had their money.
Yeah.
Rather than traveling or buying these expensive cars or whatever, they don't
Mhm.
know what to do with their money. They don't know if they can just invest, make an investment.
Mhm. And they're making the
$5,000.
designers richer, way wealthier. You know?
If something happens, those designers aren't going to even be there to even give them a penny.
Nope, nope. They don't know who you are. Why would they give you
No,
some
they
money?
care. They care less.
Mm-hmm.
They could care less, about whether you're just one of a billion people
Yeah.
who've made them rich.
Mm-hmm. Yeah.
Don't even know your name. Who is that?
You need to be finding those designers and selling them policies, helping protecting them. You know.
Yeah, I bet if you
Believe
go
me,
ask one of them, ask them for a job, they'll look at you and like, we're not hiring. You
hmm
know what I'm saying? That I guarantee you that's something that they would say.
Oh yeah, they got people. They don't need
They got
you.
people, we're not hiring. Walmart's isn't even hiring now.
hmm
So this is the way for people to come into the business.
Yeah, yeah.
Walmart's is no
On your
longer
own
hiring.
time.
They got these robots I've heard about and read about, and they've got
Mhm.
these self checkout
Yeah, you
counters
bagging your
now.
own grocery. You checking your
You
own
might
own
well,
stuff out.
absolutely. You might as well be working for them because that's what you're doing anyway. They're not paying you.
Yeah,
We're working for free labor because we're bagging our own groceries, plus driving them to our car.
yeah.
We don't even get the opportunity for them to take them out, take them. I could be 90 years old, and I guarantee not one person gonna ask me to take my groceries to my car. Not like
Right.
the old days.
I know. I know. It is not like
Not
that
like the
anymore.
old days. No, what's that? They say.
Oh
What
God.
is that? They don't be talking about none of that. Mm-mm.
Hmm.
They ain't try to hear nothing about you need no job. They could care less about you need a job. So that's why I say we're in the industry to have other agents that we're looking for to come into the business. You don't have to be licensed, or you can be licensed. We still gonna train you the
Yes.
OIC way.
Hmm. You get absolute free training, for 30 days. You come in, just knock it out in 30 days or less, and you can be a licensed professional insurance agent, in less than
Yes.
30 days. Yeah, so you
And
can't.
and Apple, who's listening, who asked that question, we're hiring. That's how we make our money. If
Hmm.
you're interested, give one of us a call. We'll definitely sit down with you and explain the program in depth with you, so you can get the exact idea of how the industry works, how our company works.
Yes, yes.
And that company is our
Happy
infinite
to have you.
company.
Happy to train.
Yeah,
Hmm.
absolutely. Absolutely. Yep.
Yes. Yes.
So that's what we were trying to do tonight to accomplish, get the word out, showing people how to take care of their money, save their money and things like protect your family, grow your money, let your money work, you let your money work for you rather than you working for your money.
Absolutely.
And Apple, that's what we do. We let the money, we don't work for the money, we let the money work for us. And that's going out there spreading the word to individuals about, how they too can, protect their money in
Hmm.
their savings and everything. So
Yes.
that's our goal. That's our goal, guys, is to save that money. And again, we always ask the question, are you taking control of your money or your money controlling you? I don't want my money to control me anymore. I want to control the money.
That's right. That's right.
Other than my husband's money, I want to control. I want to control the money. Rather
For
than
real.
controlling my husband's money, I want to control the money. You know, and make coverage contagious. That's
Yes.
our goal here. That's our mission.
Hmm. Yeah.
That's our mission.
Yeah.
So
Having an uncomfortable conversation so that everybody can understand what it means to be covered and protected. Having insurance, building generational wealth. That's our goal, our main concern. Make
right,
insurance coverage contagious. Everybody should be talking about that. Not,
everybody.
not only for that, the person that dies. It's a person for those that are still alive also. So, it's a definite need, uncomfortable conversation, but let's talk about it.
Yep,
You have to get together
exactly.
with your family and really, really talk about it and understand what it means to actually be covered, fully covered with insurance, where you can be your own bank. You're building financial wealth,
Yes,
generational wealth.
and generational wealth as well. Because if something happens to you and you're in this industry, that money passes on to your kids, grandkids, and whomever.
Yeah,
That's what we call generational wealth.
yeah.
Again, look up that information on the Rockefellers. Read about how they got all their wealth. That has been an inspiration for me as well. Just reading about the Rockefellers, how they became one of America's
Hmm.
richest families there is.
Yes.
It's not yeah, they're one of America's richest families,
Hmm.
and they created their wealth through insurance policies
Yeah. They understood that concept fully.
fully.
Hmm.
Who would have ever thought?
Right. You think about your beneficiaries. You got a primary beneficiary, you got a contingent beneficiary, even a tertiary, a third beneficiary. You know, but you're placing those policies in a manner where you're covered in the event something happens to you. If you're critically ill or terminal illness or injury, you can have that benefit. But also your beneficiaries, if you do pass away, they're covered. They have that wealth to build on, and it's good to teach them so that they can understand what it is they're getting. A lot of
Mm-hmm.
young people, once again, is that financial literacy. They
Mm-hmm.
may come into $500,000 or whatever, but what are they going to do with it? You know,
Right.
going to ball out of control, or are you going to continue to build on that money? That's building that generational wealth that the Rockefellers did.
Exactly. Exactly. Because I
Yeah,
tell you what, they got a bunch of money, and I'm sure they're still using that same concept
yeah,
of
over and
putting
over
those
again.
policies. That duplication. That's what
Hmm.
they do. That duplication of the system. And guys, that's what we do when we're out here talking to individuals or when we're recruiting. We duplicate, and that's all it is duplication.
Yes,
You know,
absolutely.
the process is basically duplication of the process of what we do.
Hmm.
We duplicate it. We do it over and over and over again. We talk to people about, you know, what their needs are. We
Hmm.
do a financial needs analysis also on our individual clients to
Hmm.
find out what policy is good for them, how
Yeah.
much can they afford, how much they can afford. Because you may want to decide that you want to go out there and get a $500,000 policy, but because of the finances and what we said, we won't recommend that because we don't want it lapsing or you losing that policy and then something happens.
Yes.
But you can always you may not be able to get what you want today, but tomorrow it may be a whole different story because again,
Hmm.
finances change between people, amongst people
Absolutely.
every
Absolutely.
day.
If you can only afford that $30 or $40 a month policy, $50 a month policy, then do that. At least your family is protected. But then talk to us about uh, getting, working the business part time so that you can earn
Yeah,
income, so that you can build a better policy for yourself, for your family. you know you,
right.
you can earn you can earn that income, and plus you can sell yourself your own policy. So it's
Hmm.
just so many ways that you can overcome that situation, so that you can build a life and make things better for yourself and for your family.
Absolutely, Barbara.
It's
Absolutely.
contagious.
That's exactly what we plan on doing. We're going to keep talking about it and talking about it and talking about it until it gets, people understand it, they catch on to what we're trying to accomplish and join the mission with us. You
Right.
know, join the mission with us because again, there's no limit to how far you can reach with this.
Hmm.
You can expand into other states. You can be in Houston, Texas, and expand in California, expand in Washington, expand in New York, wherever you choose.
Yes. Hmm.
The opportunities are there,
Hmm.
with this business.
Yeah, many of us have ties everywhere, all over the country. So there's no limit as to what you can do in this business. No limit. Okay, Joyce.
Exactly. That's it. We
We
don't
we,
have a
lo-
limit to
we
what we
lost
do.
Kim.
Huh? We
We
lost
lost
Kim.
Kim.
We did. We lost Kim in the process of everything.
It's
And I'm
okay.
sure she'll be back with us next week. I think she was in her car driving too. She has grandkids that I think they had what is it basketball that's going on now? I think basketball games or something like that. We all have been busy. I'm in San Antonio. My
Mm-hmm.
internet service where I'm staying is just kind of it was wacky tonight, but I got back on the phone. I'm like, oh, let me get my phone now. It's
Right.
almost dead, but it's right on time because it lasted for the show, and I'm
Yeah.
appreciative for that. But guys, come join us. I'd love to have some new teammates to play around with and get
Mm-hmm.
this thing going. We would absolutely love to have you come join us on our mission. because we
Yeah.
are on a mission, to
And it
spread the
doesn't matter
word.
where you are, what side of town. You can be in any city, any state. It doesn't matter. Just join us. Join us on this mission.
Yes, please,
Extremely
yes,
important to all of us.
yes, yes. And guys, I think our time is almost up. That's it for tonight. And thank you guys for joining us out there. And hopefully, you have learned something, and you sit down and you really take into account what we spoke about tonight, and just ponder on it. If you're unsure, if you have questions, call us. We're available. I always say I'm available 24/7 because
Mhm.
I am a business person, and my business never shuts down,
That's right.
especially when it comes to helping families. I'm always available. It doesn't matter what time of day, time of night. Got a question about this insurance? Call 281-814-7332. And Barbara,
Yes, and I am Barbara Calvert. My number is 346-243-4011. Be happy to talk with you.
absolutely.
Joy,
Again, come on and join the mission. Yes, sir.
did I have your number wrong? Here's your number on the screen. Is that correct?
I'm on my phone, so I can't see that. 281
814.
814-7332.
7332. Okay.
Yes, it's on the flyer there. I think you have up.
Yes, I can barely read it though.
Yeah.
It looks like 7333. I'll correct it right
No,
now.
it's 7332.
Mhm.
Well, great show, ladies. I'd like for you to end the show with telling them about the we already covered the living benefits. Could you cover annuities right quick and how they can take advantage of that to close the show?
Bobby, you want to take that one?
Sure. Yeah. Now with annuities, you have a variety of different types of annuities. You have a fixed annuity, variable annuity, and an index annuity. An annuity is basically it's a lump sum of money that you set aside that can either grow in the volatile market. That's your fixed. I mean, I'm sorry, your variable annuity. You have a fixed annuity where the interest rate is just fixed at a set amount, and then you have that index annuity, which dabbles a little bit in the stock market, in the S&P, but your money goes it can go up, um, or down. Well, the market goes up or down, but you don't lose any of your money in these in an annuity. So you putting your money in a safe area, a safe
Mm-hmm.
product, just like your 401k, IRA, or any money that you have in a savings that's just sitting there and not growing. You can build by placing that money into an annuity. Yeah, it's a product that's safe, um, and like I said, you can either set aside like 5,000. The minimum is usually like $5,000, but you can
Mm-hmm.
go as high as you want, pretty much with an annuity. You can do a lump sum, you know 20,000, 100,000, 500,000. Just depends on what your income level is. And this is a means of assisting you in saving and growing your money.
Mm-hmm.
Thank you
You're
so much,
so
Barbara.
welcome.
We have lots of people sticking their heads in and sticking their heads out. I just want to catch their attention while they're listening to the show with PowerPoints. Thank you.
Okay,
I put
awesome.
I put the definition
Thank you.
I put the definition of annuity on the screen. It's a
Mhm.
fixed sum of money paid to someone each year,
Yeah,
typically for the rest of their life. Can you imagine making an investment today and being paid the rest of your life for
there you
making
go.
one investment? That's what we're talking about at the conclusion of today's show.
Mhm.
It's called Let's Talk Coverage Over Cocktails, and you can view this show every Friday night from 8:30 to 10:30 right here on Real Talk 100 Radio. Thank y'all so much for tuning in on Instagram, on YouTube, on Facebook, and Twitter. Thank you, thank you, thank you for the likes, the shares, and the comments. If you're watching the replay, please, please, please go ahead and continue sharing the video and make sure you give these ladies a call. I'm going to put their numbers on the screen right now in case you can't read the screen. To your far left on the picture, upper left-hand corner is Joyce. Wave at them right quick, Joyce, and confirm your phone number.
It's
Two
it's
eight.
281-814-7332.
Got it right this time. Give her a call if you're watching the replay or you're watching live right now. Make sure you give her a call if you want more information about building your own wealth, about protecting your family via life insurance. That's her number. And the second number to call is to make sure you call Joyce or call Barbara. This is Barbara's number right here. As Barbara waves at you, wave at them right quick.
Guys, thank you for tuning in. I am Barbara Calvert. My number is 346-243-4011. Happy to talk to you at any time.
Find out more about life insurance today, because what happens is a lot of us don't do better because we don't know better, right? So get with these ladies. You might not be very educated on life insurance, but these ladies will educate you on it. They'll educate you once again on how to protect your family in case of an untimely death in your family. And they'll also teach you how to become your own bank. How do you become your own bank? You take your own investments and you invest the money that you earn from your own investments into assets. That's how you become your own bank. These ladies can teach you how to do it every week on Let's Talk Coverage Over Cocktails. Their co-hosts are on the screen as well. If you happen to know one of the co-hosts and they're your friends or your aunties or, hey, your sisters, give them a call. Give them a call. New friends are good friends. I promise you that.
Yes.
Absolutely.
Absolutely.
Thank you guys for tuning in. Appreciate you guys. Like and share and pass the video on to family and friends.
Thank you, guys. Let's make coverage contagious. Let's continue to talk about it.
Let's make coverage contagious. I'm going to put that on the screen too. The reason you make life insurance contagious is because it's more beneficial to your life than those Jordans and those PS5s that you buy every Christmas. Buy your family life insurance for Christmas. Buy your family life insurance for their birthdays. And with that, I'm going to say good night.
Excellent.
Good night.
Good night, Joyce.
Good night, everyone. Good night.
Good night, guys.
Thank you.
Good night,
Thank you,
Joyce.
Malcolm. Good night, Barbara.
You're welcome. Good night, everybody from Real Talk 100 Radio. Y'all keep it locked to Real Talk 100 Radio the rest of the night, because we've got a lot of great music. All you got to do is go to Real Talk 100 Radio on our Facebook page or our Instagram page and click the link in our bio, and you can jam live with us right now on our radio station. We're jamming a lot of Southern soul. We're jamming a lot of the youngster music that the youngsters like, but mostly it's Southern soul. We even play a lot of 90s and 2000s greatest hip hop and R&B hits. Go ahead and go to our Facebook page or our Instagram page and jam with us the rest of the night. Good night, everybody from Real Talk 100 Radio.
And good night.
Good night. Stay safe out there.
Good night. Yes.
Good night, everybody from the Let's Talk Coverage Over Cocktail Show. Join us next Friday night and every Friday night from 8:30 to 10:30 right here on Real Talk 100 Radio. Good night. Bye-bye.
Bye. Peace.
Mm.